Yesterday, the Dow closed above 2007 highs. This morning, futures have a positive tone as Germany's top court announced that it would back the Eurozone's €700 billion bailout fund. Facebook CEO Mark Zuckerberg admitted in his first public speaking engagement since the IPO that the company's early mobile strategy was wrong. And finally, all eyes will be on Apple's product launch today at 1 o'clock. I'm Lindsay Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the morning call. This morning we're getting a positive tone out of the futures after Germany said that they would back the €700 billion ESM bailout plan there. And we also have a couple other events to watch today. The FOMC meeting starts today, and then we get Apple's launch of their iPhone 5 at 1 p.m. So what are you watching?
I've been watching a little bit of everything, and we came in today not knowing exactly what was going on in Germany, and they actually ratified it with conditions. Another important thing that I've been talking about is, remember we talked about the ECB, where they were doing everything in their power to keep the euro together, but they're doing it in a smart way, something that's going to last long term. Conditionality, sterilization. Now, Germany's following it with conditions, so it's not giving out the free lunch. So basically, what the market's going to be looking for now as far as Europe, they're going to say, when is Spain going to come and ask for the funding? When is Italy going to come and ask? So that's what we're going to be focusing on in the next, I would say, week or two. But for right now, the market action is telling a different story. It's saying positive, it's saying constructive. Yesterday, like you said, the Dow is at 2007 highs, the Nasdaq's at 12-year highs. So if you have a macro equity plan, as a macro investor, you're getting rewarded. As an intermediate term trader, you're getting rewarded. And as an active trader, there's money to be found every day for cash flow if you're educating yourself and you're putting yourself in position to find it versus just based on opinions that this can't continue, which is what a lot of the bears have been saying.
The S&P has been holding above its prior breakout level, which, as you noted before, is a pretty positive sign. So where can it go from here?
If you look at the chart of the overall S&P, you will see it's been constructive since the October 4th outside day. You take a look at the chart here, go back to last October. This was an outside day almost a year ago when the market started to act very well. This was when things changed. Then you had a higher low, higher low, higher low. Look at all these higher lows, lot to light. That's why technicians, have been talking about the constructive nature of this market. Then if you take a look closer here at the last pattern that we talked about, this cup and handle pattern, right? All of a sudden in the end of August, we started to go tight, consolidate higher. A lot of guys in the bearish side were saying, oh my goodness, we're stalling, we're going to fail, we're going to see a 10-15% correction in September, and pow. Last Thursday, we broke out, had a little follow through on the Friday, even in the wake of a pretty bad jobs report. Then we've been flagging higher, holding this prior breakout, which to me is very healthy. So if we get over the previous high here of just say 1438, you're going to see a move into the 1440s. And then my target for 2012 is 1450 to 1470, and I think that might actually be conservative.
Let's take a look at the monthly chart, too, and see how you can get to that level.
Well, a lot of people think that we just come up with numbers out of thin air, which is far from the truth. Mm-hmm. Technical analysis is much more than just lines. You have to figure out, what the story is telling you, how to approach it, what the headlines are saying, and what size you should be in. And if you look back at the chart of the S&P, you'll see, you got to go to the monthly chart now to see what's going on. Now, we talked about, again, higher lows, outside days. Here was the outside day. This one was actually back in 2009. Here's an outside day, giving you a sign to be long the market after, the false breakdown right there. Another higher low, another higher low, another higher low. And now finally here, we're making a higher high. So if you look over here at this little point of reference, this one is 1440. Okay, that's probably, we're going to have some resistance. That's what we might touch today. And then if you look right here, that's 1471. That's basically where I thought, we could hit, but this was also way back here. So I was figuring here's your double top in the past decade. The highs here are around 1576. So I figured 1440 or 1450 to 1470 was a viable target. And then a lot of guys like Red Dog, how do you come up with 1700 in 2015? Because on Mad Money, Jim Cramer did off the charts, I think a few months back, and I said in 2015, we could see 1700. Why? If you go back to the chart, you'll see, if we do hit this target and consolidate and continue this path of higher lows, once this double top gets taken out, why wouldn't we add 150 handles? We've been now in a 12 year channel going forward. And what has this been doing? It's been absorbing a monstrous move from 1994. So if we take out this 1576 double top, I don't see there's any problem of us reaching 1700 by 2015. And the reason why I put these longer term objectives on is because I just want guys to have a macro plan. I think everyone should have a 401k. I think if you have young kids, a 529 could help. So put money in macro funds, and also get an intermediate plan so you can find the best acting stocks. And if you're really involved, get an active approach so you could create cash flow on your current, inflow from your profession.
We're going to get into the sector spotlight here with some of the stocks that Stephanie Link at Action Alerts Plus and Jim Cramer are looking at and trading, and how they're playing right now in this market. First up, we'll take a look at Boeing. This is one that Stephanie has been adding to on weakness. It's really lagged after Qantas canceled its orders for 35 aircrafts. People thought maybe more cancellations would be coming, but if you dug into the issue, you would realize that it's really a Qantas-specific issue. It's not going to impact earnings. This company has a massive backlog, and given that it's below her cost basis, Stephanie's in there buying. There's a micro uptrend, though, also showing in the stock. Do you think that could continue, turn into a macro uptrend maybe?
I think it's worth watching. Okay. A lot of these stocks that she likes, fundamentally, they have a great story. And, I kind of like to have my eye on them, and then I wait to see some kind of pattern for me to get involved for quicker money. If you look here at Boeing, we talk about a tier system. I would say for investors, why not be in a tier 1 versus 70? It's not, it's lagging the market pretty bad right now. It's below all the moving averages. So as a trade, it's not on my radar. If you're an investor, you know what, maybe you have a tier 1 because I've seen her trades ignite once things change. And as a trader, it really has to break this downtrend. It really has to start getting back above these moving averages. So I don't think traders will have a real interest until it starts getting above 73.5. But you want to be in a tier 1, be in a tier 1 versus this support. If it starts breaking below 70.36, the next level doesn't really come in until down here around 67. So be in tier 1 versus support. If it starts breaking this downtrend, I think that's when traders will give it a little bit more attention.
Wells Fargo is a best-in-breed bank that Stephanie Link owns. She also owns JP Morgan, but she's buying Wells Fargo on recent weakness that we've seen there. The CFO was out yesterday at an industry conference talking about net interest margin pressure that might be a little stronger than some people anticipated. But hey, this mortgage business that they have has been strong, and it should help offset that. Stephanie likes the valuation, so she will buy it on dips here. What do you think about the stock? It has had a great run this year.
As an investor, you haven't been worried at all. You haven't been in the news. You haven't had big hiccups like JP Morgan or, the mortgages like Bank of America, this and that. So overall, the stock is fine. As a trade or as a trader, if I took the name Wells Fargo out of the picture and you look at the chart, you will see that, it tried to break above this recent resistance and came back in the base. That tells me it's not ready yet. Maybe it's because of the recent news. Overall, acting very well still, near the highs. There aren't a lot of, these major banks near the highs. So I think buying it in the dip, if you have a long-term time frame, that's fine. As a trader, I know that if I bought this breakout, was trying to hold it and this happened, I probably would be out of the stock and I would wait for it to try again. At this point, I think the traders are really watching more of the JP Morgan, the Bank of America, and the Goldmans, but they've been beaten up and battered and bruised. So, guys chasing performance have been going after them. So they've been just trading a little bit faster. Yeah,
it definitely makes sense from a trader's perspective. Stephanie also owns AIG, which she would be buying. They had a secondary offering, which they priced Monday night. That took the government's stake in the company down to 21%. It's going to let investors really focus on the fundamentals of this company, which really are improving. It trades at just over 50% of book value, so it is cheap. I think you had a nice trade in here. We're seeing support at the 32.50 level, which is where the secondary priced.
Well, it's great to see some conviction. Like early morning, even on Twitter, I saw Stephanie say, I would be buying it at 32.50 even. Doug Cass said that's a good spot. Guys like Mark Sperling on my floor, he started to watch it. You saw pre-market, he was buying it there. You look at the chart, I think I spoke about this yesterday as well. Here's the 50-day, it's held the 50-day many times, closed on the high. So it's nice to see that they supported the deal, they supported the prices, and a lot of people made money. You got rid of some of the stake, and basically traders were able to buy it, and it didn't break price. People are sick of these deals not working, they're sick of them not supporting them and breaking price, and that price on this was $32.50. Pre-market was like $32.30, and you had a nice trade as it closed in the high. So this one, it feels like everyone wins.
Yeah, one more financial Stephanie's looking at is SunTrust. Now, she's trimming her position here because it's up 25% off the stock's lows in early July, I believe. And it's a great play on the housing market as well. They're located in the southeast, which is starting to see some signs of life. And we've got a bunch of the analysts now jumping on with Stephanie saying that they're upgrading the stock, saying this is a buy. But given the run, she's taking profits. So is there a trade here? Or?
I love it. You know, trade them and trail them. Trim them as they go up, not chase them. We don't like to chase excitement. We like to be in there, add on a breakout, and then sell them to strength. And this one has been an unbelievable player. Like you look here at the chart, you know, this almost looks like a tech stock. You know, this broke above this area right here, which is about 25.76. Gave you a nice follow through day. Like this is a day that traders would love to be involved in. Then it gaps up. That's a nice move in 3 days. That's something that's rewarding everybody. And now it's flagging higher, holding the gap. We talk about when things hold the gap, how much power there is. So I would say, you know, it's great to trail it, but as long as it stays in this flag right here and holds this gap, I think some momentum guys might even buy this thing if it clears above 28 for an additional move. But overall, you know, on every time frame, you know, SunTrust has been doing very well. Congratulations to them.
Well, we're going to take a quick commercial break, and when we come back, we're going to get into the trenches with some of that high beta tech that you all love.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to get into the trenches with the high beta tech names that have been under pressure lately. From a broader perspective, we've seen the NASDAQ underperform the S&P and the Dow over the last few sessions. Now, part of that has to do with Apple. We've seen selling pressure in that in the last couple days, heading into today's event where they're going to introduce the iPhone 5, which is an exciting product for them, and they need it because it's 50%, over 50, or just about 50% of revenues, excuse me, and it's a bigger margin product for them. Are we going to get a sell the news type of event with this type of action in the stock?
What's actually interesting is that they sold the news 2 days before. So today, if they want to rally the stock, I think they can. I think they got some fast money out. People who are uncommitted to the stock maybe baited some shorts in. I think, you know, this product release is going to be one of the biggest in history. You know, I wouldn't be surprised if they don't do the iPad mini. That's supposed to be in October, so people might say that's a disappointment. Not a lot of us are expecting that. You know, the size should be different. You know, there's gonna be a lot of different capabilities. I think it's actually genius that they're changing the size, because what does that mean? Every accessory out there has to change, so what does that mean? A lot more revenue for Apple. You know, but if you go to what I watch, which is a technical take, you know, it still acts well. I know technology lagged the last 2 days, but I think the overall market played catch up, which is healthy because a lot of people out there own a lot of those other bigger names. But anyway, go to Apple, which is my thing I trade every day for my entire career. You know, ever since that earnings where it came down, held support, this was a nice entry right there for those looking for it. Really, this is when I got interested again from a macro swing approach right here. 3-day move held higher, and then look at this move from 600 to almost 680. So even from that level, 80 points. So not so unhealthy for it to just trade down 2 days before an event, take out some fluff. Yesterday it held the 21-day and held the lower end of this channel. So for me, that's healthy. It's up $4 or $5 right now. I am long Apple. If after the news is released, it can get and stay above 670, I will add, and then we'll see how it handles the upper end of this channel. But overall, you know, as a macro investment, I've been talking about this, I think, for years and years, for like the last 3 years, saying if you're a macro equity investor, you know, you can be a stock picker, you can make a lot of money. Equity markets are not dead, and Apple proves that this could help you build a net worth. And at this particular point, I don't think the highs of the year are in, even if they try and sell this event.
Google is also seeing some short-term weakness after hitting above $700 at the end of last week. Yesterday it closed at $692. How should a trader position themselves in this name?
Well, everyone was crying, oh my goodness, high beta's down. Meanwhile, Google, since the earnings, had like a $100 run. Yeah. You know, extended from the 8-day, extended from the 21-day. You know, guys on my floor yesterday actually tested it around the 8-day. You know, I had to leave midday for, you know, a private scenario. But anyway, you know, it bounced off it. It's good to have a plan. It's good to know where these levels are. You know, it still could see some type of, you know, back and forth action. If you look at the chart here, you will see, you know, Google, since this lower level here, since 560, what a run it's had, methodically as well. You know, this is when we really started to talk about it acting better around 620, and then it broke above the highs of the year. You know, if you look at the highs of the year right there, consolidated, went again, and what did it do? Look at this little pullback, and people are saying game over in Google. Anyway, you take a close look here. Yesterday, it tried to hold the 8-day. This level is another area of support right here, which is about 688, and here's your 21-day. So I think you need to watch, Google and some of the other high beta names to see how Apple reacts. If Apple reacts well today, I think this thing, you could trade it versus the low here of 691. But overall, I've said it since the beginning of the year, I love the monthly chart on Google. I know it took a little bit of time, but it started to work itself out. Your historic high here on Google is 747. This is when it was all about search. Now it's got like 5, 6 viable businesses, fundamentally cheap. I don't see any reason why. It could happen before the end of the year to take this out, but within the next 6 months, you're going to see headlines out there saying Google at historic highs. Congratulations to macro investors. You can be a stock picker, and equity markets are far from dead.
Amazon last week got a nice boost too. It introduced its updated Kindle and Kindle Fire. It hit a new high on Friday, but it's also taking a break, I guess, this week. So what are you seeing in this stock?
Same thing, just an extended leader that needs a little time. We've talked about many buy prices of this. You still have to buy these correctly. You still can't just chase and close your eyes and say, okay, I'm going to make a lot of money. It doesn't work that way. You have to educate yourself. You have to know when to enter. If you look at Amazon, when it reported earnings, when it broke above this 230, that's when everyone started getting excited. And then what happened? You retested. You could have bought it there. This, remember tweeting about it right there. Another nice, good, entry. And then it extended. So now you've had a 2-day controlled pull-in. It's right near the 8-day. So either the 8-day holds or the 21-day holds. That's what we're looking at. Some guys started buying a little bit back yesterday. I was not one of them. But why not? It hasn't pulled back much more this entire way. And again, if you go to a monthly chart, oh my goodness, look at this. You could be a stock picker and make a lot of money and ride things out versus be stuck in a 12-year consolidation like the S&P. Educate yourselves.
Priceline, interestingly, was up 1.5% yesterday when a lot of these other high beta tech names were down. It got an upgrade on Friday to buy. They seem to be doing a lot of things to mitigate their European exposure and focusing and trying to mitigate that with their business in the U.S. and the Asia Pacific. What are you seeing in this stock? Can we get involved yet? Is it bottomed? What do you do?
Guys are trading it now. I think as a macro investment, I don't really advocate Priceline just because it's something that I don't understand, and you don't have to be in everything. But ever since earnings, it's been slowly, methodically going higher. You look here, there's a small uptrend since the bottom here, since the bottom of that earnings. I think guys started getting a little frisky here once it started to break above. You had a nice 2-day move, and since then it's been methodically going higher. I think if it gets above this price point of $624.50, you could see another move to fill a decent part of this gap. It is a little sloppy and hard to trade, so you have to have a little bit of a risk tolerance here, but still moving higher above this 625. You could see a move to 640 to 650, so it's worth having on the radar, just not a leader.
Okay, let's do some quick hits. We'll start with Goldman Sachs. This one's been moving the last few days. Is it too extended though? Can you get involved here? What do you do?
It's hard because we were trying to buy this at 103, 107, and then it had a nice move. And then after 3 up days, I actually tried shorting this. I'm like, you know what? I'm 6, 7 longs. Let me try and get a short on. You look at Goldman Sachs. I got stopped out of it yesterday. This was, this is when you had the nice flag pattern after a spirited move off the lows. This would have been your quality entry right here. And then it had a little faulty action in here. But if you were a macro investor, you never got pushed back too much. And then finally, it started to expand or started to, really ignite. And on this day, what this gave me a little conviction on was that the banks would be in place. So on this day, when I saw Goldman break out, that's when I started to really focus on JP Morgan, and I started talking about 37.50. Anyway, 3 big days, sideways type action, still going higher. I'm not long Goldman Sachs. It's hard to enter. Some guys are trading it, but I think overall it's healthy for the sector.
Winds showing some relative strength here. Do you think that we can get through the moving average?
I've been going with LVS just because ever since it capitulated, it's given us 4 or 5 entries. Wind's been lagging a little bit, but yesterday it woke up. So if you want to look at a casino, you look at this one right here with Wynn. Not so bad. It's been battered and bruised. Look where Wynn came from this year. My goodness. Look, we talk about outside days, why they're important. Well, if you were able to sell right here on this outside day, you're in much better shape. Or even if you missed that, this one, and then more recently you had this one. So these are all days to take notice, and that's why I take notice of them. So down here, it's really a laggard play, but laggard plays are doing okay, in this market right now. So I would say, above this little area right here, as long as it stays, above you could even give it a little bit more room. It's above the 8-day now. As long as it stays above 102, stay with it. In order for it to get momentum, it's got to take out yesterday's high. Yesterday's high here is 105.21. And then your next point of reference is right here, which is around 110. So there's about $5 of room for the active trader if it stays strong.
VMware was up 3% yesterday. It's had a couple days up. Do you think it's time for it to consolidate a little?
This one was actually, I made decent money here. I haven't traded VMW in a while. Guys on my chat room, congratulations, thank you. You guys are like, oh, look at VMW, look at CRM, and that's the beauty of having a chat room with experienced traders that share information, that give good ideas, that instead of rumor mongering, they're out there saying, oh, look at this looks good, look at this pattern, look at this potential breakout. Well, anyway, yesterday VMW was flagging, took a look at it, and it was my first trade in that particular stock in a long time, and thank goodness it worked out well. So it shows you can rotate. So what I saw yesterday was this little flag type pattern. I'll get it a little bit bigger for you. So right here was I wasn't involved here. This was the downtrend that broke to the upside with a nice igniting bar. Then it went sideways in the top third of the range. So yesterday I started buying it around 95. Nice $1.50 opening up today. I'll probably sell some on the open. That's a nice cash flow trade. That's why we call this a quick hit. As an investment, it hasn't been great, but this sector has a lot of exposure to Asia, or not Asia, I'm sorry, Europe. You see this, outside day right there where it pushed through and failed. It's been in a downtrend since. So with that said, some investors probably aren't the happiest, but that's why sometimes one man's trash is another's treasure. And right now, for guys who bought it right here, you're doing okay.
Well, that's all the time we have for today. So those are the stocks we're looking at, the sectors we're looking at, and the level on the S&P that we're watching. Tune in at the end of the day to check with Scott and the T3 Live team for their daily recap.